Alright, so listen up. We're talking about the support resistance with breaks and retest indicator. This bad boy is like your secret weapon to slaying the markets. First things first, let's get you set up. Hop on over to the TradingView and head straight to the indicators section. That's where you'll find treasure trove of awesome tools. Keep an eye out for the support resistance with breaks and retest indicator. Once you spot it, just give it a click and add it to your chart. Boom, you're already on your way to trading mastery. Now, here's the deal with the game-changing indicator. The support resistance with breaks and retests indicator is your new best friend for spotting continuation patterns and pullbacks in the market like a pro. It's designed to automatically draw out support and resistance levels while keeping tabs on sequential conditions, making it super easy to identify those sweet breakouts after retest. Plus, it's got built-in method to detect liquidation events, so you can make solid informed decisions without breaking a sweat. So if you take a look at the chart, you'll see the indicator has spotted a resistance level and drawn a line to show it. When the price action breaks above this resistance level, the indicator gives a break signal on the chart. The signal is basically telling you that it might be a great time to jump in on buy trade. In another example, the indicator found a support level and marked it with a line. When the price action broke below this support level, the indicator gave a break signal on the chart. The signal is suggesting that it might be a good time to think about selling. Plus, if you like to wait for a pullback before making a move, the indicator also gives retest signals on the chart. These retest signals show you when the price action is testing the broken support or resistance level again, giving you another chance to enter the trade. As you can see, most of the signals are pretty accurate, but hold up. The default settings might not give you the full picture of the long-term trend, which could lead to some not so accurate signals. For instance, in this example, we've got an accurate bullish breakout signal. This means we might need to make some adjustments. So let's head over to the indicator settings window and go to the input section. Here, we can change the look back range to 14, which sets how many bars are considered for a pivot event to occur. We'll leave the bar since breakout and retest detection settings at their default value. In the strategy, we're going to use the breakout strategy, so we'll keep the breakout option on and disable the retest option. Now, the most important step is to disable the repainting option by choosing candle confirmation. After that, we'll enable the override option. You can also change the break signal font to make it more noticeable. These settings will make the indicator work and signal much better. However, we never trade solely based on one indicator. So let's add another confirmation indicator to the chart. But before we do that, if you subscribe to TradeGenius channel, you'll get access to more than 300 profitable trading strategies. So let's subscribe and then get back to the strategy by adding the MA ribbon R2 by just Uncle L to the chart. You can do that by going to the indicator section and searching for it. The MA ribbon indicator is a handy tool that draws colored ribbons on the chart to help you visualize trends. When the ribbon is green, it indicates an uptrend. And when it's red, it signals a downtrend. However, as you can see, the indicator is currently set to show short-term trends, which isn't ideal for our strategy. So let's make some changes to better suit our needs. First, we'll head over to the MA ribbon indicator settings, and then the settings will change the slow MA type to SMA, which is simple moving average. This adjustment will help us get a clear picture of the long-term trend. Next, we'll change the slow MA period to 200. This means the indicator will consider the last 200 bars to calculate the moving average, giving us a better sense of the overall trend. We'll also enable the option to show colored bars, which will make it easier to see the trend direction at a glance. Then we'll disable the other options to keep the chart clean and focused. Finally, we'll go to the style section and make the ribbon more visible. This might involve changing the color or thickness of the ribbon so that it stands out more clearly on the chart. So when the trend is upward, like in this example shown by a green ribbon, we won't enter trades based on bearish breakout signals. These signals will be filtered out because they go against the overall trend. However, the next signal is a bullish breakout in an upward trending market, so we're good to go. We can enter a buy trade at the close price of the signal candle. For the stop loss, we'll set it at the most recent swing low of the market. In my opinion, this is the best strategy for setting the stop loss. As for the target, you can set it to a risk to reward ratio of 1 to 1.5. This means if you're risking $100, your target profit will be $150. Now the opposite is true for a sell trade. When we're in a downtrend shown by the red ribbon on the chart, we won't enter any buy signals. All the bullish breakout signals will be filtered out in this example. Instead, we'll take bearish breakout signals like this one on the chart to enter a sell trade at the close price of the signal candle, and the stop loss would be set at the most recent swing high price. For the target, just like with the buy trade, we'll use a risk to reward ratio of 1 to 1.5. So let's check out the next signal, which is another bearish breakout signal during the downtrend. This means we can enter the sell signal too. As you can see, this one also turned out to be profitable. Moving on to the next signal, we have another profitable sell signal. The following signal is yet another bearish signal, but this one would result in loss. And that's totally fine because no strategy is 100% profitable. It's important to remember that losses are part of trading and the key is to manage them effectively. Now let's move on to the next signal, which is a bullish breakout. Since we're in a downtrend, the signals gets filtered out, so we won't be entering a trade here. Finally, we have one last bearish breakout signal, which would be another profitable trade. By following these guidelines, you'll be able to make more informed trading decisions and potentially increase your chances of success in the market. The key is to always trade in the direction of the overall trend and use proper risk management techniques to protect your capital. This means setting appropriate stop loss on targets and not getting discouraged by occasional losses. With patience and discipline, you can improve your trading performance and achieve better results over time.